Welcome to the SARE Ladies podcast, the sister brand of Subtle Asian Real Estate, where our mission is to get more people that look like us participating in the real estate industry. We invite experts to not just talk about real estate, but also about our unique identity as Asian women and the cultural values that shape who we are as investors. I'm Anita Wong.
And I'm Tiffany Lee. We're both real estate agents and investors based in the Bay Area and New York City. Whether you're a seasoned real estate pro or just starting out, there's something for everyone here. So pour yourself a glass of wine or boba tea and join us as we celebrate the achievements and unleash the untapped potential of AAPI women in the real estate industry.
Welcome to the SARE Ladies podcast.
Now let's get on with the show. But first, a word from one of our fabulous sponsors. Hey Ryan, how's your student housing room hacking system going?
It's going awesome. So we're pulling in $40,000 a month, and I'm getting ready to quit my W-2 in about a month.
That is awesome. Congratulations. Was it easy to pull off?
No, I basically had to scale it over a course of 7.5 years. But really using the room hacking method, I was able to skyrocket my portfolio so quickly.
That's awesome. I'm sure other people would love to learn how to do this. Is this something that you're teaching?
Yes, I do. I teach a 6-month coaching program. It's one-on-one coaching with me through Zoom calls just like this. And basically we go through market analysis, deal analysis. We'll cover renovations to increase your profitability, as well as the marketing and the management and creating a full system for yourself along with teams. So you basically have this cash flow for life. You should be bringing in about $1,500 per month in cash flow per property.
That sounds great. Where do I sign up if I want to learn more about this?
Yeah, so we actually have a discount, a 17% discount if you go through my website, www.newbierealestateinvesting.com/SARE Ladies.
Awesome. Again, that's newbierealestateinvesting.com/SARE LADIES for that 17% discount. Thanks so much, Ryan. We'll see you at SareCon.
All right, thanks, Tiffany. I'll see you guys there too.
Now on to the show.
Hey, SARE Ladies. Welcome to another fresh episode. And today we are super excited to have one of our favorite guests back on the show. And that guest is no other than Ashley CAO, Director of Old Capital Lending. Say hi, Ashley.
Hello.
Hey, girl.
Now, today we just had to have Ashley back here because since the last time she was on SARE Ladies, she was with our dear friend Paul Peoples, the godfather of lending. And if you haven't caught that episode, we'll link that show into our notes. But that episode was an absolutely must listen.
So this episode, Ashley's back by herself as a SARE Lady, as an officially minted member of SARE Lady after this SARE Ladies Women's Leadership Summit. That is a mouthful. Anita, we need to change the name of that at some point. It's crazy. But, when we had the Paul Peoples episode, Anita and I had not yet met Ashley, right? That was actually our first meeting. But this episode, it's going to be way more like chill and warm because the three of us finally got to hang out in real life at the SARE Ladies Women's Leadership Summit, along with 17 other women. So, at that big, long event is just, a fancy word for a bunch of real estate women renting out an Airbnb and just getting plastered on mimosas and shin ramen while girl chatting and just gossiping. And then so we all had a primer on each other. So everyone had a partner up leading into SareCon, which was such a great, way to just break the ice. So we got to know each other maybe a little too well, but hey, that's how lifelong friendships are born. So let's jump into it with Ashley. So Ashley, tell us a bit about your background, your family, your individual professional background, and then your family background and how that all kind of fits together.
Yeah, so thank you guys for having me back. By the way, the Shinlin ramen at the summit was awesome because I forgot who, I think it was Noni or somebody prepped the bowls with beautiful bok choy and all that stuff. So I thought it was really cool.
You wouldn't get this at a male event. If you had a fraternity event, they'd be it'd be so gross. Ours was so pretty. We had all the mimosas lined up in the morning. It was aesthetic. It was very, that's all Anita.
But yeah, so I'm Vietnamese. I was born actually in the Midwest. I'm from Missouri. And so I ended up there because my family were refugees from the Vietnam War. So they escaped the war. They were the boat people. So they escaped on a boat in the middle of the night. And it was a really crazy experience to just hear just how they were able to do that. And so my grandpa and my grandpa and my grandma have 8 kids, and so one of them is my mom. And they pretty much gathered all of their money and sold all their gold in order to buy a 20-foot fishing boat. And so their plan was to leave in the middle of the night and flee to a refugee camp. And so I think it was like the night before they were about to leave, they found out that somebody stole their boat. And so they had to essentially rebuild and figure out how to escape again. And so eventually they were able to do that and sail to Singapore and stayed at a refugee camp. And so eventually a Baptist church ended up sponsoring my family and bringing them over to Missouri. And that's how we got started in the United States. And so my family started off working just kind of like odd end jobs. My grandparents did not know how to speak English. And so the kids had to figure out how to speak English and figure out how to be in a new country for the rest of the family. And so my mom is the second oldest. And so she was kind of like leading that charge because the oldest sister actually stayed back in Vietnam to wait for her husband, who was a prisoner of war at the time. And so my mom was kind of leading that charge, and she ended up starting to work at a Chinese fast food restaurant, just working in the back, and then eventually working in the front at the counter and stuff. And then eventually the owner of that restaurant decided that he wanted to sell the restaurant. And so my mom went to her parents and asked, like, hey, do we want to figure out how we can buy this restaurant so that, we can take it over? And because they didn't have a lot of money saved up, she ended up working kind of like a seller finance deal with the owner of this restaurant. And saying like, hey, can we just take over this restaurant and then we'll pay you over time the amount that he was looking for. And so they worked out that deal. And then the rest of the siblings ended up working at that restaurant and then essentially helped pay for all of the college tuition for all the siblings and stuff. So all 8 brothers and sisters were able to successfully graduate from college, just starting out in America and stuff. So that was really cool. And then that's when I came along and I was born. And so I grew up in Missouri with a very interesting kind of experience where I was like one of 2 Asian kids at my school. The other one was my older brother. And, I didn't really have a lot of exposure to like culture and stuff because a lot of my friends were either Black or white. And so that was a really unique experience where I felt like I didn't know the difference between cultures and things like that. I just thought it was like one of them. And then the other piece was that when I started school, I didn't know how to speak English. And so that was like the other challenge where, there was no English as a second language class back then. It was just like you figure it out. And so I was thrown into American school, and my first year in school, I did not say one word at all. And so I was just like a wallflower trying to observe and understand the language. And eventually, I started to understand it. And it was really cool because I had friends. So like my classmates still included me in play and things like that. And I still remember my first words. And it was, we were having like playtime. And one of my friends was like, hey, can you pass me that phone? And I picked up the phone and I was like, whoa, this is heavy. And I just said it out loud and the world like stopped. Like everyone was like, and like surrounded me. And like, they were just like, say it again. And I was like, this is heavy. And they're like, oh my God, she spoke. And that was like my breakthrough into like speaking English. And then from there, I was able to communicate more and just felt more comfortable, speaking a new language. But yeah, so that's kind of like how I like my upbringing was really interesting, I would say. And then eventually my family moved over to California. And so I think the reason my mom wanted to move to California was she saw a lot of culture. She saw a lot more Asians and things like that. And so I think I had like a reverse culture shock where when I came to California, I was like, there is so many people that look like me now. And so my first friend was like, I'm Filipino. What are you? And I'm like, what? I had no idea what a Filipino was. I thought it was like a food or something like that. And so yeah, I had like that reverse culture shock, and I started to learn about my own culture and other cultures and things like that in California.
How old were you when you moved to California?
I was in third grade. So what is that, like 9 or 10?
Oh, okay. Yeah, that's not great. I thought maybe you were like a teenager. I was like, wow, that's a very late Asian bloomer. But
No, yeah,
eight is cool.
yeah.
That's amazing. So it seems like, your family went through so many obstacles to get to America. And then once they got to America, even more obstacles, right?
Right.
And then you were kind of like thrown into the middle of it too. Like you were born and it wasn't like easy. It was just like obstacle after obstacle, after obstacle. And I think that I almost feel like knowing you now, that kind of built your resiliency. Like you're almost like desensitized to obstacles that come your way because it's already behind you. You've assimilated. You're now like I wouldn't say fully like, but you're more. There's so many layers to you that if anything crazy comes your way, especially with like in real estate investments, there's so many like weird like little one-off things that come up. You almost have like a innate ability to navigate it because you were kind of born and raised in it, like Bane and Batman. Like you were raised in you merely whatever that quote is, but that's kind of like with real estate investment, like you're not the villain, you're the hero of the story, but that's what I meant. So we all know that your mother played a huge part in your life. I think you already covered this question. We can, with her going into the restaurant, buying out the restaurant from that guy, like that is such a great story. It almost feels like she imprinted that I can't speak today, guys, that entrepreneurship like soul into your being. Right. So, yeah, we totally covered. So, all right. So, tell us more about your pivot. Like, where did you start off and how did you end up in commercial lending? Because I think, that's kind of analogous to your family story, but now map it to America. Like, that was like survival mode. Now that we're in America, wealth building mode. Not as scary as, getting your boat stolen in Vietnam and like, making your way over here. But what were some like setbacks that you've been able to navigate professionally?
Yeah, I think, and I think you're right. I think a lot of like my family history really inspired me to want to continue to grow the family legacy, right? And so it's like, they sacrificed their lives to go on a escape mission, and I'm like, I can't even imagine doing that at a young age like that. And so I think I took those kind of like learnings and saying like, hey, I'm not going to ruin my opportunity to do well out here because my family worked so hard to get me to where I'm at. And so, for me on a professional background, so I was in tech for quite some time. I was in tech for about 11 years. And so I was doing technical recruiting. So I worked for Tesla, I worked for Google, recruiting engineers to come and work at these great companies. And then on the side, I was investing into real estate. And so one of the nice things of working in tech is getting a stock. So like equity and things like that is a good incentive for people to come and join these companies because of the hope that the stock price will continue to grow and then the value of your equity or your package will grow too. And so I used a lot of those, that equity to buy real estate. And so one of the strategies that I did use is a securities backed line of credit. And so that was, I had a lot of Tesla stock, for example. And I was like, I don't want to sell the Tesla stock because if I sell it, I have to pay taxes on the capital gains. And so I was like, how can I continue to keep my stock so that it continues to grow? And then still leverage that to buy more investments. And so one of my friends who is very savvy in just kind of like the financial space, he's like, oh, why don't you just do an SBLOC? And I was like, what did you just call me? And so I was like, what was an SBLOC? And he's like, oh, it's a securities backed line of credit. And so if you're thinking like home equity line of credit, like a HELOC, where you're using your home as collateral, an SBLOC is using your stock or your securities as collateral in order to get a credit line to purchase things. And so it works just like a credit card. So I use the HELOC and I use an SBLOC in my early investing career to be able to buy properties and then pay that line over time. So that's kind of how I got started on the real estate side, and then getting into the commercial lending side. I was actually, just talking about setbacks. I was laid off from Google. And so that was like, I thought it was like a huge setback. I was like, holy crap, like, I've never gotten laid off before. But the nice thing was that during that time when I was at Google and Tesla, I've built this foundation of a real estate portfolio. So when I got laid off, I was like, actually, it's okay. Where I just didn't feel like so devastated, because now it wasn't just one source of income. I had rental properties to kind of support some income. And so how I got into the commercial lending space was I got laid off, and then I ended up going to a real estate conference, and I bumped into one of my mentors, Paul Peoples, who I was on the show with before. And I was in touch with him for a while because I invested passively into some syndications, and he was the lender for that syndication. And so I met him during a trip to go look at that property, and kind of stayed in touch with him. So I bumped into him again at the conference, and he's like, oh, I heard tech is laying off. How are you doing? And I was like, oh, I got laid off, but I'm just looking to get into more real estate things. I think this is a good reason why I got laid off. And so he ended up, kind of recruiting me, where he said, I think that you have a lot of the same skill set that we're looking for. And so I ended up joining him and Old Capital, and working as a commercial real estate lender. And so just kind of like serendipitous, I guess you can say, and just along the path that I always wanted to get into anyways.
That's awesome. So instead of escaping, your Vietnam flee was like fleeing from a W-2. Almost.
Yes.
But not quite the same.
Not quite the same. It's a little bit safer, but I think like for our listeners, that's like kind of a goal of theirs. Like I feel like our parents and grandparents did the whole immigrant thing, and that was super dangerous. That's a common thread. So like we're kind of soft now. These like American born Asians. These Asian Americans, what am I saying? But yeah, like, now it's building wealth, right? And I think that survival mindset with your family is like hard to break away from, but taking that risk, especially with money, and rebuilding, that's so inspirational that you shared that. And also it's like, you don't know things until you know things, right? Like you were talking about culture shock and just being exposed to a new environment. It's like you didn't even know about SBLOCs until someone told you about it. And so it's like this exposure to education, through podcasts and groups like this that I think, help people learn more about what's possible, right? Hey, we're going to take a little break, but in the meantime, here's a shameless plug for one of our amazing sponsors. Dr. Hua Win and her husband, Dr. Jaime Gonzalez, both optometrists by trade and owners of multiple multi-million-dollar optometry practices in the Dallas area, founded Black Steel Investment Group with a passion to invest to impact. With the foundation forged on 3 pillars, integrity, community, and legacy, they put their investors at the forefront of everything they do. The couple are both seasoned, full-time multifamily investors, syndicators, and asset managers who, together with their investors, have invested in over 6,900 units as general and/or limited partners in Texas, Arizona, Florida, and the Carolinas, with total assets valued at over $480 million. Juan and Jaime are always working to find new investment opportunities for their investors. The couple enjoys traveling the world for delicious food and interesting cultures with their 8-year-old daughter Athena and have a puppy named Coco Ali. Now on to the show. So, Anita, I'm going to toss it over to you.
I love that you I feel like the story that you're telling in tech is is happening everywhere. I mean, because I'm in San Francisco now, but there are just layoffs left and right. And like, I just know so many people that are reaching out to the people at SARE Ladies. They're like, I no longer can feel like I can see my tech job like at Google or wherever, to be this solid foundation that I always thought it would be. And there's so many people that are like, all right, well, I only have these stocks. I have, or whatever saved up.
Right.
So I love that, SBLOCs are such a good way to kind of get these, like people just like that to get started in their investing. And I'm pretty sure they don't really know anything about that. So going on the SBLOC route, what are the risks and benefits to SBLOCs, and what's the repayment structure like?
Yeah, so I have mine with Morgan Stanley, and so I think it varies among different providers, but it works kind of like, I would say, like a credit card, right? So if you use part of that line, you have to. So if you use part of that line, you get interest that gets accrued on that, and so as long as your line is pulled, there's an interest rate that gets applied to that, and it is a variable interest rate, so it does get tricky in like a time like this where interest rates are pretty high. The nice thing is that Morgan Stanley has these programs where they offer like fixed rate options. So like they're like, oh, we're doing a promotion this month, you can draw from your line and then we can fix that rate for that amount that you've drawn. And so I take advantage of those fixed rate opportunities, because for me, I hate the variable thing because it just makes me a little bit nervous. And then they'll kind of structure it where it's like, you can draw from this line. We'll fix your interest rate for the next 3 years or until you pay that line back. And there's no prepayment penalty for that piece, but it's just a nice way to lock in an interest rate. And then, so I would say the risk is that there is the chance of the variable interest that just kind of could be a really high expense for you. And so the way that I try to approach it is like, if I use that money to invest into something, I usually use it to make sure that I pay it back very quickly. So whether it be like the first time I used it was for like a burr. And so I used it as the down payment for the property. I fixed up the property and then I ended up refinancing and paying that line back. And then, I'm sorry, I used that line to buy the property in cash, technically. And then I refinanced and paid that line back. And then the other kind of risk to it is that if the stock price drops, so whatever the collateral is, if that stock price drops, then there could be a margin call. So like, if it drops way below what is drawn on that line, then they can come in and say like, hey, you need to put more money into your account in order to avoid a margin call. And a margin call would essentially be like, they would sell some of your stock to kind of pay that line down. And so you don't want that, because that's when you pay the capital gains tax and all that stuff, and the main thing that you're trying to avoid. So I usually my rule of thumb is like, if I have a line, I only use like 30% of that line. And then that way it gives me that cushion. And I never draw the full line. And usually what they'll do is they'll give you a line that's about 65% of the value of your stock portfolio. So 65% of that, and then I only use 30% of that 65%.
Yeah, and it totally makes sense. So you're kind of doing the stuff that is like really quick turnaround, like fix and flips and things like that. So things not like syndication perhaps is a little bit too long of a hold, or a long-term rental, or is probably a little bit too long. But it would be sort of ideal for, let's say, like with big companies that are generally really stable. So, like not your like, startup money. Like I would say here, like if you're in a startup, maybe not the best idea, or, it potentially, depending on how volatile or whatever the company is. So I guess it's like really for like if you work at Microsoft or something like that with pretty steady stocks.
Right? Ashley, can you draw and can you do an SBLOC off a retirement account?
You cannot, not that I'm aware of. And so that's the challenge with retirement accounts. It's hard to leverage it. I have actually leveraged it where Google offered, and I don't know if it's Google specifically, but it was through Vanguard. And so you can borrow up to 50% of your retirement account. And the really cool thing about that is whatever you borrow, the interest that you pay on that, the interest gets paid back into your retirement account. And so it's kind of just paying yourself in a sense. And so I definitely have used that in the past and that one's not technically a line of credit. It's like you take a loan essentially, and then you pay an interest on that loan.
Got
Very
it.
cool.
And then so you would say like, I mean, now the interest rates are, hitting a little bit over 8 today or whatever, something like that. So you think that people, if they do want to take advantage of this, maybe should wait till the early next quarter or something like that. But maybe, I don't know, there's some speculation that it's going to come back down into like the 4 or 5%. But yeah, do you think that's a better time or kind of just do it now?
So the way that I usually try to approach it is, so I have used it to, for example, like put a down payment for a short-term rental, because I know that the returns on a short-term rental are much higher. And so let's just say I get like a 20% cash on cash for my short-term rental. And I know that like the interest rates are floating, let's just say 10%, right? At least I know that like I'm making enough to cover that line, even if it hits 10%, 12%, because there's still that runway for it. So I would just say like I would leverage it as much as possible with the idea that you get into something that you can either pay back pretty quickly or the returns on it can cover it pretty well. Like there's that. At least that's how I would approach it. Yeah.
Yeah, and then potentially if you just wait until like all of, like the interest rates drop back down, the competition is going to potentially swamp you, right? Because there's I feel like when it comes back down to 5 or 4%, feel like the floodgates are open and everyone's going to be bum rushing everything. And all the home prices, I think they're anticipating to go up 15% or something like that when interest rates drop.
When it drops, then that's when you do the refi.
You do
now, and then you do the refi when it drops.
Where you buy now and then do your refis
later.
Date the rate, as they say.
Date the rate. Marry the property, but date the rate.
Awesome. So on that note, I think we covered everything, right, Anita? Yeah. So we are at time. Ashley, thank you so much for chatting with us today. And fun fact for our listeners, not only is Ashley a financing guru, she is also a cool DJ, and she cleverly goes by the name DJ Ashflow. So if you pod squatters want to get in touch with Ashley with questions about lending or syndication questions or anything like that, because she just like laid so many education bombs on us today, blew my mind. Or you just want to party with Ashley. Ashley, how can our listeners find you? And do you have an upcoming gig that you want to plug?
So you can find me on Instagram. It's _Ashflow. So I post a lot of content for investing and then some of my DJ stuff on there as well. And then I'm also on LinkedIn. So I'm heavily on LinkedIn. And I think Gary Vaynerchuk just recently said LinkedIn is cool. And I do think LinkedIn is really cool. Or it's cool again, I think he said. But I use a lot of LinkedIn to just connect with folks on the professional side. And obviously I was a recruiter, so I'm very used to LinkedIn. So
wait, before we go, I want to hear about your ladies DJ club.
Oh, yes. So I am a part of a all women's DJ club called Ladies First. They started in Canada. So the original chapter is in Canada. And then they ended up expanding to a chapter out here in the Bay Area. And so it's just an opportunity to provide like a safe space for women to learn the art of DJing. And so it's really nice. It's another male dominated industry. And so it's like, how do women break into that and not feel so like imposter syndrome and like find that alliance with folks? And so Ladies First kind of provides that platform. We do have like a headquarters. So the kind of founders of the Bay Area chapter, Mike and Shar, they're a couple and they're a DJ couple. So they actually DJ together. And then they ended up providing this like space for us in Campbell. And so they do like workshops and things like that for people to come and learn how to DJ. And so I've been with them for, I would say, a little bit over a year now. And it's just really awesome because it's a group of ladies. We all play together. We share gigs with each other. So if somebody can't play a gig, then they'll share it out to the group. And then we just kind of are there to support each other. So we do have a residency in downtown San Jose at 55 South. So we usually play on I think it's the second Thursdays of every month. And then, we'll kind of play randomly throughout the month as well over the weekend. So.
Ash, do you have like a track, like a recorded track you can send over to us? I want to use it as our sign off for your episode today.
I can probably send you something.
Yes. Wait. All of us pretend like we're dancing, so it looks like we're signing off. See, like.
You guys have an intro, right? Like
we do have an intro. We have an outro too, but I want for your episode, I want to do a custom sign off with your track.
Okay.
So, yeah, I feel like that'd be sick.
Or maybe I can take your audio or your music.
Ooh, that'd be cool. Can you drop like SARE ladies, like in it, like Yeah, that'd be sick. We should have Ashley do our new jingle for 2020. Yeah. All right.
Remix our voices to sound cooler. That would be fun.
Some auto-tune and stuff.
Yeah.
I'll send you some rapping bars. We'll just like send you a bunch of samples from all.
No one wants to hear rapping bars from me. I will guarantee that. All right. Well, thank you so much. We love having you as always, and see you next time.
All right. Thank you so much.
Ash.
Bye.
Bye.
Thanks for listening. Here's one last note from our lovely sponsors.
Hey, SARE ladies, listeners, Tony the CPA dude here, also your resident SARE tax bro. And with your lovely host, they came up with some great ideas. So Miss Tiffany and Miss Anita here came up with the tax workout plan. So we're gonna help you get cut up on your taxes, also gonna help you cut up on your own body. So just like working out, taxes is a monthly thing. You can't ignore it, otherwise you're gonna fall off the cliff. So with the code SARE ladies, we're gonna give you a nice healthy discount, and we're also gonna give the SARE ladies a kickback just to help support their podcast. I've had a fun time being on their podcast a couple times this year. They've done great. I really wanna see them blow up in 2023. So with your support with this creative tax workout plan and also a workout plan in general, we're gonna help you transform your life in 2023. So mention the code SARE ladies when you talk to me. You can email me at Tony@thecpadude. Text me at 928CPA-dude. TikTok's the CPA Dude. Website's thecpadude.com. Everything's the CPA Dude. So SARE ladies is your special code here, and let's make this year great.
Thank you for tuning in to the SARE Ladies podcast hosted by Anita Wong and Tiffany Lee. Special thanks to Subtle Asian Real Estate, LLC, our parent company.
If you enjoyed our show, please leave us a review or follow SARE Ladies on Spotify and Instagram at Subtle Real Estate. You can also click on our show notes to subscribe to our newsletters to stay on top of our news and upcoming events. Until next time, Pod Squatters.